Hello. China has long been seen as a country which has and will continue to dominate world manufacturing. But not so, according to a report out today, which our manufacturing editor, Peter Marsh, has had an exclusive advance peek at. If I'm right, Peter, Boston Consulting Group's figures show that US productivity is still much higher than that for China, and this is benefiting it in all areas from washing machines to bulldozers to furniture.
Well, this is the point that they're making in this report, that productivity in America is still about 3 times higher than in China. Buttressed alongside that, wage growth in America has been relatively low and will continue to be quite low for the next few years, and costs are going up in China by quite a long way, and this will redress the balance somewhat towards America and away from China in the world manufacturing league table.
Just to amplify that theme, we have a graph looking at manufacturing output from the US. Just talk us through this. I think this is quite revealing about the story you're painting here, the picture you're painting.
Well, this just shows really what a good job America has made of manufacturing in the past 10 years. Because you can see from this that output in the last decade, which is the green line, has, even with this huge recession there, it's still gone up by about 6 or 7% over the whole decade, while employment has actually gone down by 5 million, which is an awful lot of people.
That's higher productivity.
Yes, and so this is translated into much higher productivity, which is much in advance of other countries. And actually, China has been going up in productivity as well, but the wage growth in China has been higher.
Very interesting. So what does this mean for the US for the future? I think people have been perhaps quite gloomy about the US.
Well, if you look at the figures, last year was the first time for over a century that America was not the world's biggest manufacturing country. China took over as the biggest last year by just a little bit. And in fact, for the next 100 years, I'm pretty sure China will continue to be the world's biggest manufacturing country. But America will continue to be a very strong second, this is what it's saying. And also it's saying, these figures are saying that for goods that are being sold into America, there'll be very little point to offshoring that goods production, apart from the high production volumes, very low variation product, but all the mainstream of manufacturing, you might as well do it in America.
So US a strong second, but let's go to our second graph. What about the rest of the world, above all Western Europe? You and I, we've made a few videos together about UK companies and the niche they're occupying in manufacturing, but in general, how is Western Europe faring and in the future?
Well, what this graph is telling us is that Western Europe isn't really doing so well.
Right, now explain why that's the case in this graph.
You have to look at this carefully, because these are wage costs, but also adjusted for productivity. So the higher up you are, the less competitive you are in this graph.
And that's Western Europe's high up. Then.
Yeah, and they're high up. I mean, they can compensate for that by being very clever, by doing high-tech things, which of course a lot of manufacturers are doing.
But the mass manufacturing is harder.
Yes, and it's harder to do that kind of thing. You also have to remember that wage costs are only part of the picture. They're only 1/3 of the total costs of making something. There's the investment costs, R&D costs, everything else. So they're not the whole story, but this is telling you that these 4 West European countries which have been highlighted here, they're not doing so well, while America actually is doing quite well.
Occupying a happy middle position there. And finally, I mean, in this very interesting picture, what about China for the future? I mean, you said it's going to be here for 100 years, but those rising wage costs are a real problem.
Well, they are, I suppose, but you do have to remember that wages in China, depending on how you measure them, are still perhaps 1/20th.
Right, much smaller.
Or perhaps a bit higher than that. They used to be 1/20th. They're more like 1/10th now of America. So they've still got a big advantage. What China's got to try and do is to go up the value chain in terms of being better at technology type production, which is something that America is still very good at.
Well, it's a fascinating story. Thank you, Peter, and I hope we might see you soon in the US following your odyssey across the manufacturing renaissance there. Who knows? I hope so. In the meantime, do have a look at our manufacturing in-depth of Peter's videos from the UK and one we've done from the US, ft.com/made in.